All right. Well, good morning, everyone. I'm Brooks Rayford, CEO of NC Tech, and welcome to this live briefing on the release of our quarterly leadership poll. In the early months of COVID, we did some polling to take the pulse of leaders in the tech sector about how COVID was impacting their organizations, see what their expectations were for the near term, and so on. The results proved to be of great interest to our members and to the media. And so starting in 2022, we launched what will be an ongoing quarterly poll that asks some consistent questions about general business sentiment, like on hiring, growth expectations, et cetera, as well as some questions that might rotate in and out depending on current events or issues. We conduct the poll in the first month of each quarter. So this third quarterly poll was conducted last week, and we are releasing the results today. You'll find this on our website at nctech.org/pulse, and all the past polls are there as well. We polled 315 people across the state and had a 40% response rate. The respondents are members of the NC Tech Board of Directors, Board of Advisors, various tech CEOs across the state, and leaders of large tech hubs or sites in North Carolina. These are big campuses that might have hundreds or thousands of tech workers who work for a company that's not headquartered here but has a big presence here. Our sponsoring partner from the inception of these polls has been the Stearns Financial Group. Their founder, Dennis Stearns, serves on the NC Tech Board of Advisors and is very engaged with us. And Dennis joins me today. Welcome, Dennis.
Thank you, Brooks. Happy to be here. And as usual, we have combed through the data, looked for some trends, and with the work that we do with local, regional, national business leaders and the Federal Reserve Beige Book that just recently came out, I'll sprinkle in some comments about how our members are a little bit different than some of the expectations going on in the country right now.
That's a good point. It's worth noting that, of course, the audience here, the respondent pool, is made up heavily of those who are in or dependent on the tech sector. And as we saw from the inception of COVID through now, the sector has weathered that storm perhaps better than many. In fact, in some cases, has thrived in the environment where there's a greater demand for tech and tech skills. So that certainly is a unique factor. All right, well, the results are broken down. We've got slides here that show each of the questions in sort of visual representation. So if we can move to the first one, please. The first few are just to give you a flavor of who responded. We asked what range best depicts the number of North Carolina-based employees are in your organization. And you can see here the pie chart, pretty evenly divided from small, medium, and large. Next slide. We also ask if your organization is headquartered in North Carolina. This stat is fairly similar to previous polls. About 2/3, in this case a bit higher than that, are headquartered here. This actually also reflects the Tech Association's membership profile. About 2/3 of our member companies are indeed headquartered in North Carolina. Next slide. Thank you. We ask about their role. You can see it's heavily C-suite. There's some other functional roles here as well, but very much a senior executive respondent pool. Next. Now we get into some of the sentiment questions. So how do you perceive the past quarter of 2022 in terms of how it's been for the tech sector broadly? And what you'll see is obviously still pretty optimistic. The good and great come to about 70% or so. Okay as a quarter. Very few say disappointing or terrible. I will say that there's a slight dip in the great. Great went down about 7 points from the last quarter. Good went down 11. Okay went up 11. So a bit of a shift towards slightly less strong optimism, but still pretty positive results on the past quarter.
Which I think is interesting, Brooks, to look at that in comparison to what's happening in the stock market right now with earnings. And the best sector for earnings right now, not surprisingly, is energy. The worst sector for disappointments is technology. So I guess you can be fairly constructive day to day in your business and yet maybe not making the bottom line numbers that you wanted to make.
That could be too, as well as, I mean, the vast majority of the respondents in our case are probably not affiliated with publicly held companies. So some of those large firms that have had some dips may not impact the breadth of the respondent pool here quite as much as that. So a good point to make. All right, next slide. Now we ask a slightly different way. How's the past quarter been for your own organization? Now remember, the first one was, how has it been for the sector in your opinion? This is, how has it been for your organization? And again, we saw a decline in the great by about 12 points. Good stayed about the same. Okay went up 6 points. And the slightly disappointing went up 6 points. So really the drop in great, they probably dropped into good, and those in good dropped into okay or slightly disappointing. So some moderation. However, it's worth noting that people felt better about their own organizations in many cases than they did the sector at large. That's always been one of the trends we've seen across these polls. All right, next slide. Now we're looking ahead. I expect that over the next quarter, our business will grow, decline, or stay the same. This one had one of the more notable changes from the last quarter. Remember that what's happened in the last quarter was, of course, inflationary pressures, some of the hiring or pausing of hiring that you've read about, supply chain continuing to be a problem, and of course, the impact of the war in Ukraine. So the grow part of the slide went down 20 points. Stay the same went up 14 points, and decline only went up 4. So even though grow went down quite a bit, those folks moved into stay the same. They did not move into negative or pessimistic territory. Dennis, how does that compare to what you're hearing?
Well, yeah, that's a good question, because in the private business sector, there's a lot more negativity if you had this chart available for all private businesses. And the expectations that we're either in a recession or a recession is coming that will hurt their business are a lot higher.
That's right, especially in consumer-related businesses.
Right.
All right, next. Again, a bit of an eye chart here if you've been with us before, but what this question seeks to do is just to give a visual representation about how the pandemic has affected businesses, and ask people to rate the following as it applies to their own organization. The first column is where people answer the question about whether they focused more on new products in this period, that they strongly agree with it, all the way down to disagree. And in that the first through 7, there's 8 columns here. 1 through 7 are very similar to past answers. So you can see there's very strong agree, and there's a very high percentage that are strongly agree or agree that they have focused more on new products, that they have focused more on client services, focused more on employee retention. You'll see that's one of the strongest positive answers, along with the next one, focused more on employee health and safety, expanded employee ability to work remotely, and expanded employee ability to set their own schedule. Also, of course, increasing compensation. The last column, though, on increased recruitment efforts, this is a signal that there may be some slowdown in hiring. This is one that had the most change. This had a stronger blue, dark blue and light blue in past polling. And now there's a little more disagree or neither agree nor disagree than has been the case in the past. So a side note, we also put out as NC Tech a monthly IT job trends report. And the report that came out recently with June data did show a dip in IT job openings in June compared to May, but still up 41% over June of last year. And it's still one of the top three months in the past year. So it remains to be seen whether that is a trend or a blip. And also we do see a moderation in the summer anyway, sometimes in the tracking of hiring. And so it could be just cyclical. We'll have to play this out a few months to see. Next slide. So here we've asked about hiring. What is the economic environment? How has the economic environment impacted your hiring? Still hiring in the tech sector is the strongest answer by far. You do see a chunk there that have frozen hiring. Very tiny percentage say they are actually laying off or reducing their staff size. I will say that the frozen hiring went up 11 points, which came straight out of the still hiring. So some moved from still hiring into frozen hiring, but still this would be considered a pretty good graphic in general terms for most sectors.
Well, and one of the interesting things in the Federal Reserve Beige Book was the discussion of how many private businesses in particular were getting more pessimistic or concerned about slowing growth, yet they were still hiring. And so I think there's there's a little bit of an interesting mix there, and I think for future surveys we may try to parse that out a little bit more.
Well, in the June employment numbers came out as a pleasant surprise. There were 300 and some net positive jobs, positive jobs created, which was not anticipated in June. And I guess next week we'll hear about what happened in July when those numbers come out. So interesting to see. Okay,
Yep.
Next. All right. This one is similar to the couple of slides ago in terms of its format, but different question. Please rate North Carolina's strength for each of the following competitive areas. Again, this one was similar except for one bar. In this case, the bar is the second bar. So the others I'll touch on. The strength of our technology workforce, the cost of doing business, quality of life, our technology infrastructure, entrepreneurship support, higher ed assets is always the strongest answer on this question, and innovation ecosystem, all again fairly on par with past responses. The second column, business climate, although very strong, in fact, one of the strongest positives on the chart, was still not as strong as before. A little bit moderation there. Less so about poor ratings, more so that there were some migration from the dark blue to the lighter blue. And this probably feeds into the whole caution around what's going on with the economy in general, not necessarily about North Carolina's economy.
Yep, absolutely. And again, I think it bears noting that we're all wondering what the gross domestic product number will be tomorrow when it's released. Will it be a second quarter negative, even though the first quarter negative had a bunch of anomalies in it, so I'm not sure how indicative it is. But we had the largest gap in the GIO, not the GDP, but the income piece of the equation that the Bureau tracks. Largest gap, it gapped up while GDP gapped down in the first quarter. And so that actually plays well, I think, into the NC Tech industry in terms of where some of the strength areas of the economy are.
Interesting stuff. Good, thank you. Okay, next. We then ask an open-ended question. So there are a lot of answers, obviously, given the size of the pool. And what we've done is pull out some that seem to be most prominent. So we ask, what makes you optimistic about the next 12 months? We ask this on a rolling basis. And you'll see there's still generally a pretty strong optimism in some areas. People believe there will be an easing in supply chain as time moves along. That North Carolina certainly has had a strong track record of attracting new investments, companies coming here, expanding in the market. You can't turn on the news or pick up the paper without reading about another one. Tech still being a driver of business, so therefore tech tends to be a successful sector. There's a reference here to government investment. The federal government has provided funds that now the state has of about $1 billion in North Carolina's case to invest in broadband infrastructure, invest in affordability to those folks who have a hard time getting access, not because it's not available, but because they can't afford it. And then third area is digital literacy, helping people really utilize the access that they do have to effective ends. And that investment is just getting started. And so it's a once in a generation, once in a lifetime level of investment. So it'll be interesting to see over time what impact that has. People are confident in their own team. You see there at the bottom right, hearkening back to the earlier slide about people feel pretty good about their own organizations, and we found that to be true across these polls. Similar reflection here. Next. This one had some shifts. We asked, which of the following issues are you most concerned will impact your business? And the lineup here is the same one we used the last quarter. And inflation remains the strongest concern. It actually went up a bit. There is a switch, though. Supply chain now is higher than Great Resignation. That was swapped in the previous poll. And then political issues now ranks ahead of the Russia-Ukraine conflict. That was reversed from the last poll. The others are all about where they were. I think that's a function of current events, current status of things versus 3 months ago. We're still asking some questions about impact on of COVID and the lasting impact on the way we work, and more particularly where we work. So what percentage of your workforce is still fully remote on any given day? And here we did this in quartiles. So if 0 to 25% of your workforce is remote on a given day, you see that almost a quarter say that's their situation. The next 25% worth up to 50%, that's about 15. If 51 to 75% of your workforce is remote on a given day, that's just over a quarter. And then the largest is still nearly fully. So 75 to 100% of your workforce is remote on a given day. 35% said yes to that. I will say that there has been some shift slightly, which is the percentage that are remote, 75 to 100, went down some and distributed more into the lower tiers. So while it seems that the policies are permitting such a thing, some workers may be choosing to go back to the office because there's a disconnect between those two stats. And I think there's a slide that might speak to that in a moment. Yeah, here we go. So what percentage of your employees can choose? About 53% is the percentage for 75 to 100. Excuse me, about 53% said that 75% to 100 of their employees can choose. Another big chunk, 17, almost 18%, say that half to 3/4 of their employees can choose. So you combine those two, that's a pretty large swath. And so if, in fact, back to the previous chart, we're actually seeing more and more workers going to the office, even though it appears they have choice, it'll be interesting to see if that trend continues. It certainly will be of interest to our commercial real estate friends. Next chart. Another open-ended question, please elaborate on any long-term approaches your organization has taken around office and workforce policies. These are similar, though a lot of these have appeared in the past. Some more specificity here. You're seeing answers about specific policies. One example is 100% remote, but a 4-day work week. So maybe 4 10-hour days roughly. Or employees must be in the office 2 or 3 days a week. Maybe those are fixed days. Maybe some of them are, maybe none of them are. So there's a little more specificity in the answers this time. But overall, the rule of the day seems to be flexibility. So allowing for some degree of coming and going. We hear a lot anecdotally about companies even reorganizing their workspace so that teams can come in, work together on a project, and then disperse, and another team comes in, not necessarily having a lot of fixed workspaces. Flexibility even within the workspace, not just in your workforce policies, seems to be more and more common. Next. On that note, what are your organization's future office space or facility plans? You'll see that about 50% say they plan to keep what they have. And another 19% say add. So here we are with nearly 70% saying they're going to keep their space or grow it. This has always been a counterintuitive slide, the results here, because this result has been similar. There's been a slight shift, though, into decreased footprint. The decreased footprint has gone up some. The ad space has gone down a tad, and stay the same has gone down a tad. What we're hearing to explain this confusing message about, gee, we're letting people work remotely. We don't, X% of our workforce in total is out on a given day. Well, why in the world would you keep or increase your space? And while we don't ask that question directly in this poll, what we hear from our employers is, well, we're growing, and so we'll need space just for that reason. We also need to have flexibility for people to come and go, and that means probably less density within our space. So a space that would have had X number of people in it now has fewer people in it, but we still need that space. We want to have physical spacing. We want to be able to move people around and have flexible movement within our space. So that seems to drive the desire for keeping or even increasing the physical footprint. And that wraps up the poll. So I hope this has been interesting. Dennis, any final observations from you? You've hit on some good points already.
Well, I think with all the debate right now about whether we're in a recession or going into a recession, or even what is the definition of a recession, the old saw is that if my neighbors lost their job, it's a recession. If I've lost my job, it's depression. But what do you do if nobody's losing their job? And there's a labor shortage. So we're in some definite uncharted waters. And again, business leaders who are tuning in, I look forward to some of those conversations we'll have in Pinehurst coming up in a few weeks, because it is truly some unique times we're living in.
Indeed it is. And when you have full employment and worries about the future, it does make the workforce question interesting and maybe a little confusing. Well, that does wrap up the results. Dennis, thank you for the support of Stearns Financial Group in this effort. And a reminder that you can find this recording and the poll results on our website at nctech.org/pulse as soon as we can get the recording posted. Thanks for viewing, and be on the lookout for the fourth quarter poll. Those results will be coming out sometime during October. Thank you, everyone.